Hi, welcome to today's video. Hope you're doing well. My name is David and you're watching Critical Trading. Year 2022 was a very difficult year for most trading strategies. I trade a portfolio of automated trading systems in the US stock markets that, despite showing low long-term correlation, all started to lose around the same time last year. My overall portfolio has now managed to recover and is no longer an open loss that was back in the middle of last year. And this is mostly because I implemented new strategies to adjust to this challenging market that we experienced last year. In this video, I will share with you 3 types of strategies that I rolled out last year, which helped my portfolio to recover. And if you trade the same way I do, you might want to implement something similar, or at least start to research it and potentially combine it with your existing trading system or systems. If you've been following my content for a while, then you know that everything I share is mechanical and can be objectively validated on historical data. This is because I use specialized professional software to conduct all my tests and studies that I share in all my videos, and I take realistic trading assumptions into the account when conducting my tests. For example, trading costs. This obviously costs quite a bit of time and effort, and so if you value the work I put into this, may I suggest that you like this video and subscribe to my channel. By doing so, you helping me to spread my content among more people so that potentially more people can benefit from it. Thank you. Before I share the strategy types you should look to include in your trading portfolio this year, let me give you some context on the last year's market. Looking at the chart of the S&P of last year, 2022, we can see that the market made a top right at the start of the year here. And after that, it has plummeted and has not recovered since. It currently trades at around 50% of the retracement from the 2022 stop. So the market has been struggling for quite some time now. And this resulted in pretty much all types of algorithmic strategies that I personally know of to lose. Obviously, longer-term trend following systems and momentum systems will naturally perform badly in environments like these. There's not much one can do about it other than ensuring they manage their risk properly. But what was quite specific to the last year's market was that even my mean reversion systems lost money, at least initially. And what was even more unexpected for me was that even my short mean reversion system got into drawdown as well at the same time as my long only systems. I trade multiple mean reversion systems in the US stock market, where obviously one of them short sells the stocks. The problem was the last year's market was quite specific in the sense that my mean reversion strategy that I trade on long side was getting a lot of entries and catching a lot of short breakouts, resulting in losses. For example, days like the ones I just marked on my screen. At the same time, during days like these, my short mean reversion strategy was not getting enough fills and was therefore mostly idle and not compensating for the long position losses. And that got me thinking, what if I continue to trade my stock mean reversion systems as normal, but include some intraday breakout systems that would potentially hedge these? And that brings me to strategy type number 1 that I recommend you implement as well. These are intraday breakouts, both long and short, in the S&P or Nasdaq, traded using futures. I now trade a number of strategies of this type myself, currently about 7 in total, and they have been hedging my multi-day swing strategies very nicely during the past year. Here's an equity curve of a short strategy that trades Nasdaq micro futures. The reason I trade futures is twofold. For starters, since I'm based in Europe, I can't trade the SPY, so the ETF that copies the S&P. Granted, there are EU-based versions of it, but they're considerably more expensive to trade, so that's out of the question. And secondly, you will run into issues when trying to short sell the SPY, as it's not available for short sale at all times, just like stocks. The futures, you don't have such issue. You can short the S&P future at any time. Now, historically, futures have been out of the reach for most small retail traders because they were too big in terms of the value of a single future contract. But that's no longer the case, as there's quite a bit of a selection of what's referred to as micro future contracts that's available. All these on my screen, for instance. I have a chart of the triple Q, being the US domiciled ETF that tracks the Nasdaq index. That's in my top pane. And in my bottom pane, I have a chart of micro Nasdaq futures. We can see that the future copies the ETF's movements very nicely. If I zoom in on this particular day, this is when my short intraday breakout system entered short roughly here and closed the position at close. The open to close range of this day is roughly 250 points, which translates to $500. This makes this market a great candidate to start with. On this particular day, my short intraday breakout system hedged the loss made by my long only system very nicely, which is why I highly recommend that you include short breakouts in your strategy arsenal. Here's a look at the individual trades P&L distribution on the very same date, but of the long only system. So all trades were losses ranging from -1 to -6% on individual trade basis. If you don't know how to start, have a look at my recent video I made where I walk you through an actual intraday breakout system example, very similar to what I deployed myself. Link in this video's description. Another strategy type that I implemented as a result of last year's market developments is multi-day short selling of stocks. Now, I already had a system that short sells the stocks, but it's a mean reversion system like I mentioned right in the beginning of this video. What that means is that it uses limit orders that it places away from the current price. So it tries to get a better price as it speculates that the market will create a mean reverting type of movement. On this particular day, for instance, it would place a sell limit somewhere above the current day's high, which in this case would not get filled. What I did is I developed a system with different type of execution logic. One that doesn't rely on limit orders, but it short sells the stocks at open of the following day at whatever the price, the open price will be. That way it's guaranteed that the system will get into a position, provided that the stock is available for short sale, of course, which is not always the case. This is an actual trade that this system executed. It entered at open and closed the position on the same day at close. By the way, I shared part of this system's logic in my previous video as well. Have a look at this video's description to find it. Here's the equity curve of this system in orange with SPY in purple. This system has done a great job so far in hedging my long only systems. A caveat here, the equity curve assumes that all stocks are available for short sale, which in reality is not the case. In my experience, the live performance of such systems is about 70% of the backtest as a result. And the last category, it's not a strategy type as such, but the market. I used to trade all my strategies in the US stock market. I guess this is what most of you trade as well, as obviously the US stock market is the cheapest one to trade. As a result, I've overlooked other markets, specifically Canadian and Australian stock markets. I then did a little bit of research as to how would my strategies perform in these markets instead, and I was left positively surprised. Here's an equity curve of my long only mean reversion multi-day system. It's the exact same system but traded in different markets. The purple equity belongs to the US version, so the system that trades the US stocks, and the red equity curve are Canadian stocks. This is a considerable difference, especially when you think that this is the exact system. I haven't made any changes to it whatsoever. As a result, I'm currently rolling out a couple of new systems that will trade Canadian stocks only. I also shared more details of this system in one of my recent videos. Again, link in the description. And that is it. Thank you for watching. I hope that you took away some inspiration for your own trading. As always, you've been watching Critical Trading. See you in the next one.